I know this is an effort that started about a decade ago. Can we just start there, just step back and think about the last 10 years or so? How does this move by you and the team align with the evolution of client behavior over the last decade?
Yeah, well, first, thank you for having me on. It's great to be here. Well, you're right. About 10 years ago, we started to expand. And I think the key to think about is what is a financial center used for now as opposed to maybe historically. Historically, financial centers or banking centers were always used for transactions, depositing checks, moving money, paying bills. All of those types of transactional elements have moved onto digital platforms, onto even using ATMs. So what we said 10 years ago is the key for us is how do we provide advice and guidance? How does a financial center become a place where clients come to talk about their life priorities, to talk about what's important, their financial goals? And we have 26,000 professionals, banking professionals, financial advisors, lending specialists, small business bankers, sitting in our financial centers working with the clients. So what is happening is the reason why we keep expanding and growing our financial center footprint is because it's moved from a transactional type of a model to a relationship model, and it's been incredibly successful for us over these last 10 years.
Aron, you've told me a decade, 2 decades ago that eventually in 2024, 95% of client interactions taking place were on the digital platform. I would have assumed that your physical footprint would be getting smaller. Are you saying it's just going to get different? It's just going to change, and ultimately it won't reduce?
Well, great point. Well, the fact is it has reduced. So, right, with those transactions moving to digital, we have reduced our footprint. If you go back to 2010, we had 6,100 financial centers around the country. Now we have about 3,800. So pretty big reduction. But at the same time, it has completely transformed. So we had now 10 million appointments were made this year alone for people to come in and talk about advice and guidance. So the idea now is financial centers have, for us at least, have hit kind of that equilibrium where there's opportunity for expansion. We certainly keep optimizing the footprint in any given market, but it's the whole purpose of why people come in now is very different. They're coming in, they open up accounts, but they're really talking about how to make their financial lives better versus how to do a transaction. And that's the real shift that we led about starting 10 years ago.
Financial therapy. It's sort of this question about online. There were a lot of things about, you could plan things online in terms of asset allocation, but it seems like it needs to be done in person. Is that right?
Yeah, well, there's a couple things that our clients still like to do in person. 80% of all new checking accounts is opened in a financial center. And what's funny is if you talk to students around the country, and we have a big practice of working with college students and even high school students, many of them will say, I might not even visit the center, but I really want to know it's there. I want to know if I have an issue, there is someone to go talk to in person. So that's a really important component. But to your point is, what really people are coming in for is saying, I've got all these different priorities. I want to save for retirement. I'm thinking about how do I save for healthcare? How do I save for my child's education? And those are the kinds of questions they want to talk to someone in person as opposed to necessarily doing the research that they can do online.
How much is this really direct competition with some of the local banks, especially given some of the meltdown that we saw in the regional banks?
Yeah, I mean, we've had this strategy, again, and a real belief for over a decade on this idea of high-tech, high-touch. So we made major investments in the digital space, things like Erica, things like Zelle, Merrill Edge, our online brokerage platform, all of these big digital investments. But simultaneously, we've always felt that it was critical to keep the in-person component and to transform the centers into a place for advice and guidance. So it's been our strategy. We've been executing the strategy. You've seen our growth over the last 10 years as a result. And most importantly, it's about client experience. We have driven our clients' experience scores to all-time record highs. And that's what this is all about. It's giving our clients a great experience.
When it comes to client experience, how much do clients enjoy the robo-advisors that I know you've done a lot of work with?
Yeah, we're really proud. As part of our Merrill Edge platform, we have a self-directed platform and we built a digital advice model. And it's been a really fast-growing component of our business. What's great is we have the ability for someone to still talk to what we call a financial solution advisor who sits in a financial center, but use the technology to identify their risk and sort of time frame, think about how they want to invest across a set of diverse portfolios, all of which that are created by our chief investment office. So it's lower cost, it leverages digital, but it also has the in-person component. And it's been one of the fastest growing components of our business for the last 5 years.
Aron, do you have a breakdown of what interaction looks like across income cohorts, across age groups as well?
Yeah, sorry. Yeah, interactions. Yeah, I think what's great about the Merrill Lynch platform is it's really made available for anyone at any income level. The minimum to start in a Merrill guided account is $1,000. We have investment clients who are really the entire gamut, from someone who's just starting to invest and try to save a little bit of money for maybe their education, all the way up to people with hundreds of millions of dollars that are using our self-directed platform. We also have very close relationships with Merrill Lynch and the private bank. So for those clients who may use some of their portfolio on a self-directed basis, but still want true advice, we work with our advised parts of our company, Merrill and the private bank, to make sure those clients get what they need from a more robust, full-service model.